workspace today, different computer, but I still have two screens. I'll load up a third one here in a little bit, but I think we're good. All right, chat is opened up for everybody. Excellent. Everyone, good morning. Good morning, traders. Okay, couple things for some daily housekeeping. So we had inflation data today, economic news at 8:30 a.m. Everybody can hear me okay? Is the AV all right? So my speaker's different or my microphone's different. I'm just talking into my webcam today. All right, I just want to make sure it's crystal clear. You might have a little bit more background noise like a dog snoring or maybe a baby crying. It should be fine. So anyway, CPI numbers this morning, we had core CPI month over month came in better than expected. 0.3 was forecast, came in 0.2. Big headline was the improvement in core CPI, forecast 2.7, came in 2.6. Now, the reason I think that we didn't have a massive reaction today, but this is positive flows, this is positive gamma. All this is looking pretty good. The futures market up. I wouldn't be shocked today if we poke 7,000. We got really close yesterday. We hit 69.86. Ended up settling around 69.77, but that 2.6 improvement because the last print kind of came with a caveat of, well, we didn't really have, we didn't have data in October. The whoever prints the CPI report, whether it's BLS or whatever company it is, they pretty much zeroed out inflation in October because of the government shutdown. So now that we have another round of inflation, I did say if you watch the third-party metrics with Trueflation, we have been looking at inflation numbers improving. So overall, all inflation metrics are trending lower. That's an improvement. And so it's nice to see it kind of reflected in the headlines. Year-over-year CPI, 2.7, 2.7, 2.7. I still want to see kind of another month of this print to see, are we actually trending lower in headline CPI, but core CPI is probably a good thing. We exclude food and energy and core, yet gas at the pump is down to like a multi-year low, which is encouraging. And shelter's been coming down pretty dramatically, which is around 40% of headline CPI. So these are all things that are happening here. All right, David, let me see your question here. Waterfall question, you list the profit trap between 6,300 and 6,275. Correct, but basically once you're below 6,300, the profit trap starts, right? So if you're below 6,300 on that waterfall trade we took yesterday, you're below 6,300, the profit trap starts. It's maximized at 6,290. So you have the profit trap officially starting 6,300 all the way down to 6,275. That is going to give you any bonus, right? But 6,290 where is actually confirmed because that's the 10 wide that we did yesterday. Okay. Let's see here. And we didn't do the 6,290 with two. We just did that. We did 6,300, 6,290, 6,275, and 6,260. Those are the trades we posted. So it's a 4-leg trade. Okay. Greg, thank you so much. Yep. Let me see where that's at. Actually, let me open up on my phone. I think this laptop, I don't have Telegram up and handy. So let me go into, so I posted a video yesterday for engineered options. How many of you watched it? Screen is paused. Why? I don't know. Screen 1. Let's try this. All right, this should be better AV. Now I'm just on one screen. Okay, I'm gonna go into Telegram. I'm gonna see how many fire emojis we got yesterday. That was my Easter egg for all you watchers out there. Engineered options. All right. We have 316 subscribers in the last 24 hours, and I've got 94 fire emojis. So under a third of you watched the video. But as Greg said, great video. And Phil said, great video. Thank you. Look, I want you to watch it. I think it's a must watch. I think it just kind of helps set proper expectations. We got a masterclass coming up in engineered options in 2 days on Thursday. So Thursday at 2 p.m. Eastern time. Look, there's so much that we can do with engineered options. There's so much we can do. There's so much I want to show. There's so much I want to teach. But I understand that it's going to be a big classroom. There's a lot of new students coming in. There's possibly students that have never traded with me before. So I want to make sure we set expectations. Let's understand the concept of the trade, the core strategy. And from there, we can, like I said in the text in the video, it's like we will crawl, then we will walk, then we will run. Right? There's a lot of things we can do together, and I look forward to kind of building that bridge with you, so we can be very flexible on trading. And also just getting right to like the participation levels this week. Sorry, 1 second. The participation levels this week, did I expect the market to have zero downside this week? No. When we gap 0.55% lower, I mean, look at how price action played out this week on SPX. Let's go to a tiny little 5-minute chart here and go back to yesterday's open. I mean, we literally didn't have any follow through, right? So the market opened around 35 and we immediately went up, right? So my trade that I had pending for us on engineered options was like the 34, right? I mean, I did XSP, so I was looking at a 693 or 692, then I went to 694. I mean, we literally didn't have a pullback. So, of course, I'm not sure how the rest of the week is going to unfold, but now that it's Tuesday, positive data or positive gamma is still looking like the case. I mean, if we stay above 69.70, futures market's up about 0.10%. Big gamma levels today, 69.85, 7,000. I would say that the risk remains to the upside. Let me see if I can go Gex fudge. That's what I hate about not having my browser stuff ready. It's okay. Let me go dynamic trend here. There we go. See if they load me up the same way. Okay, so here's our SPX flow this morning, 5-minute time frame. I mean, if we're gapping up a little bit higher directionally, it looks like we could just be running towards 7,000. I mean, pre-market, I see little to nothing this morning that tells us that we're going to have like a choppy downside day. So, I mean, I hate to play it super directional, but it seems like the easiest trade today is just to let this market drift in the morning up towards 7,000. And if we get there, we take our partial profit and off we go. Because otherwise, I'm looking for my daily profit play. I want to make sure I'm selling premium way higher, right? We look at our expected move this morning. Telegram, it's Vimeo. We post, yeah. So let me see. I don't really fudge. Sorry, my Telegram is not logged in on my computer. Let me see if I can show you this on the webcam. It's going to be a little messy. All right. So if you're in Telegram, you see that big green font. Okay. That's a hyperlink to a video that I posted yesterday. That's about 15 or 20 minutes. I think it's 20 minutes long. So I posted that for engineered option. I just put must watch for all engineered options members. Video update. Big request for me is watch this video link. Once complete, you'll know why. We crawl, we walk, we run, and we do it together. No trader left behind. You're in the right place to learn and trade with the strategy and skill set that nobody can take away from you. There's a lot of stuff we can do. I'm really excited just to, teach everyone on Thursday. I get that what I'm probably doing in reality is like I am throttling back what I plan to do with engineered options. And the reason why is because I want to make sure with a big inflow of students, it's like I don't want to complicate it. I don't want to overwhelm anybody. I don't want to intimidate anybody. I get that my goal is let's bring as many traders into the fray. Like bring them in. Let's get into the ecosystem, trade with me, commit with me, and we will grind every single year. Okay, Ernesto, right? But what have we been doing on waterfall income? I talked about it yesterday. I mean, I'm good at the pending orders because we are playing the game of margin for error, right? Do you think that this market is going to continue to go up without pullbacks? I do not. So I said yesterday in class that I'm going to do a 10% buffer for my strategy 2 trades for waterfall income until we get a correction that I want. And I think that could be, any time in the next 30 to 60 days. I say these things because, let me minimize this for a second. I say these things because if we take a look at, let's say gold, look, I don't know how this happens. Okay, let's go to a daily chart or weekly chart on gold. A daily chart, we just hit all-time highs on gold. We've got another solid all-time high breakout. We are getting further and further and further away from this 200-day moving average. All right, our bar count is creeping up to 580. Once we get over 600 bars, Gold has never had more than 600 bars without having to pull back right to the 200-day moving average. Okay. So I don't know why it would happen. I don't know what the catalyst is going to be, but something will likely create a breakdown in gold to bring it back down towards these moving averages. Therefore, the velocity of this correction with gold and silver is probably 2 to 3 times the volatility of gold. If we have a correction on gold that is 18 to 19%, we're probably having 30 to 40 to 50% corrections on silver, because this little run of 18%, okay, gold is up a whopping 18.5%, 18.7%. Silver's up 90%. Okay, so you're talking about like a 3 to 4 times outperformance of silver, which also means you're probably going to have a 3 to 4 times the volatility when it comes to a correction. So I'm saying that because if we get a correction in gold, everyone's going to notice it. If we get a correction in gold and silver, everyone's going to notice it because they were the hottest trades in 2025. And if we get corrections in gold and silver, that's probably going to do something in the equities market as well. So my job is to contain the risk that I think is right around the corner, and I am treading lightly. I'm still participating. I want to participate, but I do not want to be over leveraged, over trading at these highs when I think in the next probably 30 to 60 days, we see some substantial moves that if you're not aware of or you're not prepared for, it's going to be a lot more unpleasant. I'll just say that, right? If we see a 19 to 20% correction in gold and a 30, 40, 50% correction in silver, and even if equities were to flare, 5 or 10%, everyone's going to feel it. Now, at the end of that, I do think that, yeah, the dust settles. We buy the dip on gold. We buy the dip on silver. All that looks great. But we buy the dip. And bigger picture is, okay, we get a dip in equities. Is 10% where it stops? Are we going to contain that? I think that this is why I'm positioning for waterfall income, where those dips at, 10% buffer, waterfall strategy 2, 15% buffer. Like, I want to make sure that we can have the market pull back and not be affected by that. I want to make money through that pullback, right? Engineered options, we can scale in with the grid that I talked about. That's why I have some levels we'll talk about this week in class. Okay. Trade size and risk management is the most important thing. Look, it is easy to make money in these markets when you can have the liquidity and the dry powder to buy the dips. Does that make sense? So here's an example. How many of you last year were able to get some type of participation during the April or May window? Did you have the dry powder to not see a massive drawdown in your accounts? I'm hoping that you had the ability to participate when the market was at a discount, and then you benefited from the melt up we have not seen stop yet, right? If you participated in here, you are still positioning yourself for great gains, right? But as we go higher and higher and higher and higher, I get it. Like the market might just keep running higher. Okay, it might keep melting up higher. Believe me, it's not going to do it forever, right? And I'm not bearish, but I just think that based on this structure that the market created, if this is a bit of a broadening pattern, I mean, yeah, we might blow this lid off a little bit. Let's say 7,000 is not even an ounce of resistance. If there's no resistance and we're up to 71 or 7,200 very quickly, I would, well, I guess it's up to like 72 to 7,300. I would be, extra cautious because I feel like the market could maybe have like a 10% blow off top and somehow correct back to flat. I still look, if you look back at the last decade, I mean, when is the best time to get in the market? I know it, and I don't want to say this like, oh, it's in hindsight, Chris. Look, I get that a 10+% correction here. This is 2022, so that's a 25 to 30% correction. Okay, this is a 10+% correction. This is 2024. That's a 10% correction. You go back into COVID, of course, that's a 20 to 30% correction. Now they all look easy in hindsight, but they're not. If you traded through this stuff, it is not easy to watch the market dump 30% in a month. Okay, but we are in an environment where that type of flare up in volatility can happen. And so, gold and silver could have that type of awful price action. I want to have the ability to kind of buy in those percentage level discounts. So I always kind of operate in the equities market. If I can buy, if I can start leveling in any 10% discount, any 20% discount, I'm happy. If I can level in 10, 20, 30, 40, 50, I'm going to start scaling in a lot of my capital around that 30, 40, 50%. And it's not going to be fun, right? You might think like, well, I'm buying at these 50% off discounts. That's great on an index that is built to go higher. But if we go down 50%, it doesn't mean that we automatically jump right back up to the all-time highs within, 6 to 12 months. It might take years to do it, but you're positioned for 100% upside, right? So my point is, I think that the market has rewarded us, you know, handsomely for any type of patience and pullbacks to get in on a nice percentage level. A 5% dip is rewarded, a 10% dip is rewarded. I mean, heck, for my project options edge, even these little corrections that we saw back in October, November of last year, right? We had 1 day sell-offs in October. That was that 3% candle. Does anybody remember what the heck that news was? Was that like Trump said he was going to raise tariffs, right? That was like he was going to raise tariffs again on China. So the market sold off 1 day. We bought the freaking dip like immediately. This was the post NVIDIA earnings candle. That was a big friggin' fake out. And again, just the VIX went from like 15 to 28, and then the VIX went from 15 to 29. And that was the market kind of starting that rotation, getting some of the ventilation out of its system. And we still proceeded to all-time highs. But as it's making these little tiny strides to the upside, this to me sets up like a bit of a rising wedge. If the structure breaks, we just start backfilling some of this correction area. But now like 6,550 to 6,500 is really strong support. So any type of dip into that zone, like I'm pretty excited to buy those dips. The hardest trade is going to be we blow the top off and we don't stop, right? We blow the top off, we get to 73, 7,400. But if it does it inefficiently, when that market pauses and maybe has a distribution cycle, we're probably going to pull back a little bit. So anyway, my point is, let's be patient, for crying out loud. It's freaking January 13th. There's a lot of trading ahead. So the last thing I want to do is get overcommitted on the 13th of January when we have a whole year to figure out that some of these charts are going to do what I say. Gold is going to pull back. Silver is going to pull back. They will have a massive pull on the equities market because they're big trades. Like people are leaving equities and leaving bonds to go into gold chasing this crap. And, long term, I think it's a great play. But short term, we are dealing with some major, major technicals that I think will have, I think we're going to have like a 15 to 20% correction in gold. And if we do that, we'll probably have double or triple that in silver. So I'm throwing that on the radar, and I'm fine to hold myself out there and put my reputation out there and say, like, look, I called a correction, but does it mean that I'm short on them? Does it mean that I'm bearish on them? No. It just means that I've got buying levels that I want that are much lower than current price. So, and does that mean that I'm not participating? No, I'm still long gold. I'm still long silver, and I'm benefiting from this, crazy run. But I'm in for like a fraction of the position that I just was. I mean, gold, I had a 3-year run on gold that I protected near this October top. And so when it pulled back, I got back in, but it was like a quarter of my trade size. So I'm back in, and now I'm just going to wait to build that scale, that position size back up. Does that make sense? All right, let me get some questions here. Let's see. So we're good on that for engineered income. I can, yeah, we'll talk about that in class. CLJ is asking about, XSP versus SPX. We'll talk about that. So what I want to get a consensus of for everyone in engineered options is when we go live on Thursday, I'm going to post some questions, get kind of a group consensus, because look, the trades that I'll take for engineered options are live trades. I'm in the market. Okay. So the trades I posted this week were for XSP, but I'm happy to put, levels and then optional trades. You can pick whatever you want. But like I said in that video yesterday, it is because I'm looking to, keep everyone on the small side of risk right now. We can obviously scale to whatever your dollar percentages are that you're comfortable with, but I'm going to keep everything very small and contained for like every student. There's no reason for every student to come in and jump into like, minimum risk is $250 or minimum risk is thousands of dollars. So let's risk $50 and start from there. And then we can build it together. Okay. So we'll be able to talk about a lot of stuff on Thursday, and I will give you kind of, here's my game plan every week. Here's what I plan on doing. What is a better way to distribute that message, right? If you want me to give you both levels and both trades, the trade tracker will be the trades that I personally take. So if I'm going to choose to take XSP or choose to take SPX, I'll put those in the tracker. Like whatever trades I'm taking live are going to be in the tracker, right? But I'm happy to like update the trades for the week, follow these levels, and that we have some, discretion if you want to, pick whatever asset you want. Okay. All right. So we're good on that. Let's see here. Teach contained risk by limited risk trades. Okay. Yes. Define risk for sure. Alan, yep, I didn't get a trade yet either. I literally, like, the market didn't have a low. I mean, we bottomed out, and I would have had to have gone, XSP, I would have had to gone probably 1 to 2 points higher than the opening price, and that still would have been difficult to fill. SPX, if I went 5 to 10 points higher, it probably would have filled. Like, look at the bottom of the week on Monday. It literally was the opening price, and we wicked like a couple of points, and it's been up ever since. So, I mean, that's a very difficult week to say what the market do on Monday. It was literally the bottom of the week. It's hard to get filled at a 1-to-1. It's almost impossible to get filled unless I'm going 10, 20 points in the money, which that doesn't get me like my fractional 1% that I wanted or my break even, right? So anyway, a lot of stuff we can address in class on Thursday. All right. Is there indicator going to be using confirm for what, Nick? Big dip versus small one. I mean, you can look at any chart here. So I just use a bunch of moving averages. It's pretty straightforward. They work for a reason. These are, industrial standards essentially. So I have a build out, you can call it like a moving average ribbons or moving average envelopes. You'll see that indicators. So I have a 9 period that's really tight to price. I'm sorry. I have a 21. This is a 21 period that's closest to price. So if you want to write these down, 21 period exponential moving average, and then a 50, and then a 100, and then a 144, and then a 200. Okay. So my 200, this is all on the daily time frame. I just keep this going chart to chart to chart. But my daily structure is really important. My buy zone essentially is the 200-day. So right now, I think the market is well supported around 6550, 6500, and potentially all the way down to like this 200-day moving average, which is just around that like 6450. So if we came down to test that to me, there's 2 spots I want to see the market bounce. We bounce off the moving average level, right? So we kind of, we can blow the top off first. I don't love that trade. If we blow the top off, that's great to the upside. Obviously, we want to continue to participate in that. But if we blow the upside off, I still think we're coming back to this 200-day moving average, and we trough out, we work our way back up to those highs again. Or we hit 7,000, the market celebrates a milestone, we have a bit of a correction, and I'm kind of hopeful that happens first. I'd like to see 7,000 act as a little bit of resistance. We're coming into earnings starting in the next couple of weeks where financials kick off. Then we have some Mag 7 sprinkled in. NVIDIA is going to be in the later part of February. But if we end up kind of stalling around 7,000, maybe backfilling a little bit for a 5 or 6% correction, 5% can become 10% really quickly. But look at this chart on the left. We can either find that moving average cluster, or we can also find the previous all-time highs. To me, if the bulls are going to maintain control, that's where it is. You got to maintain control around 6,500 or maintain control here. I mean, this is a big difference. 6,500 versus 6,150. That's a massive difference in pullback, right? But that's the level that I'm looking at. So either pull back to the moving average support or pull back to previous all-time highs. Structurally, that's where I would say I'm still willing to participate. I will tell everyone this year for Project Options Edge that if we have any flare-ups in volatility in the VIX, I'm going to start looking to sell premiums for income all the way back down to April lows. Because right now, April lows are over 30% lower. Okay, we'd have to drop 31% on the index in order for that to be, a threat. Now, it could happen, but we'd obviously be going into like, holy crap, 2026 is going to be a terrible year. I don't think 2026 is going to be a terrible year. So I think that any type of 5% correction, 10% correction, even a 20% correction, we'll watch, we'll see, we'll survive. Okay. So it's the 13th of January. We have lots of trading ahead. So I'm going to be a little bit tight on my trade size, a little bit picky on my strategy, because I'd rather just do this right now. I'm going to dip my toe in the water in a lot of different places for income. And when I see a much better opportunity, I will be way more vocal and way more aggressive on, okay, I want to actually position for this now. Does that make sense? Okay. Bill says daily profit play. Yeah, it was cash settled, Bill, at the end of the day. I ended up taking a small loss. My broken butterfly was down by like $2 and change. So trying to think, what was the max risk? We had the pin at 70. 75 would have been the 76 was the break even. It closed at 67 and change. So I think I lost like $1.27 on that trade. All right, just got filled. Sweet. This is for Project Options Edge. I got a trade in on the Russell. I'm gonna put this in the Project Options Edge. Let me see if I can have the. Okay, so I just took a trade on IWM for Project Options Edge. I just did a ratio split out to the end of the year. It's a 185 by 175. That keeps us out of the way. We have like a 98% chance of profit. I'm also willing to own the small caps. I think this might be one of the surprises for the year is that we just continue to melt up higher. My measured move on IWM is 300 bucks. So I mean, if we really see like small caps just catching up in a big way, despite maybe some pullbacks and volatility, I still think that we. So this is the trade that I did. I did a 185 by 175 on the Russell. It's a ratio spread, and I did that. So if I wanted to take any shares, we would have to drop from current price. We'd have to drop 163 would be my break even. We'd have to drop 38% on small caps. I don't think that's going to happen in 2026. So it's an income trade. I got $1.80, and if I took any ownership, great. But $1.80, I'll make a couple $1,000 on that trade. Okay, I've got some messages catch up on. I know it's officially daily profit play time. Let's go. It is markets up a little bit. Let's see. So 69.85, 7,000, like those are big levels. Let me just take a look at our daily profit play. What's filling there? Still getting filled in IWM. Okay, good. Let me catch up on some comments here. Should we enter engineered options trade orders today? You can, Van, if you want to enter today. It's Tuesday. I mean, you still have a whole week. We're doing the expiration out the next Tuesday because of Martin Luther King Day on Monday. So you can still enter the trades. They're still good because they're positioned around the open of the week and they're positioned for the levels that I was eyeballing from the start. Okay. Yep, I know, and I updated that yesterday, Andy. I did that. So I did the video 694, 693 because that was officially like the open. So I calculated that 693 level with the gap, right? That was before market opened. That was a quick video that I sent before the market opened, and then once we're in price and I saw the bottom, 694 would be the better strike. So that was my level, my participation level on that one for 694. Okay. It would be nice to take a trade using Thinkorswim desktop platform. Thomas, you not know how to use your desktop platform? I use Thinkorswim web all the time. That's actually much easier, much more intuitive. Desktop platform, if you're struggling to even place a trade, look at their education session in Thinkorswim and go through just a couple of those strategies of, this is a trade you want to take. Here's an option chain, find your strikes, put on the trade, manage it. Like there's tons of short videos on Thinkorswim. Okay. The reason I don't like Thinkorswim desktop is because there's 100 tools in that thing and I need like 3. So it's just a little noisy when the web platform is just give me the asset, give me the option chain, and let me find my trade. Okay. Most of the trades, Don, yes. We'll talk a lot about that in class on Thursday. Is the only time to get in Mondays? Nope, the trades are still valid, Vern. They're still valid. I'm still in the trades. They're still good. They're good. They're good for me and good in my platform. You can still get in today. Yes. Yep. Good. When did I do trade? I just put it in this morning. So let me do this. I'm just going to type it in on my Telegram on the phone because that's where I have access to Telegram really quickly. And then we'll dive into daily profit play. So I'm going to be out of the office this afternoon. So if I get into daily profit play today, the goal is to be out early and I won't be around to hold it all day to expiration. Okay. Yep, good. All right, so let me go Project Options Edge. I have so many freaking Telegram channels. There it is. Okay, new trade. The expiration that I chose for the Russell. It is the December 31st. So IWM 12/31/26 expiration. I'm buying the 185 put and selling the 175 put with 2 contracts. So it's a ratio spread. This is a year-long ratio spread on small caps. I'm willing to own IWM if price is less than 175. About a 5% chance of that. Likely, so I enter for $1.80 credit. Likely scenario is $1.80 credit. We have a $10 profit trap. If price is 185 to 175 area, below 175 is assignment, and break-even price will be 164.20 or no 163.20. And I'll prepare with covered calls for income. Okay, so the reality of that trade is I'm probably going to make $180 and I'm not going to worry about it, right? That's the trade. So I make $1.80 credit. I don't worry about it. I have a, maybe 4 to 5% chance of assignment. I don't mind taking the assignment. It'd be a 38% discount on small caps. I don't think that's going to happen. So realistically, I'm probably just going to make the $180. Okay. If I do get assigned, my break even is going to be 163.20. And that's going to be well below even Liberation Day lows. And I'll repair it for, hopefully an aggressive covered call and try to make $500 to $1,000. Okay, Alan says you're putting on ratio spreads as undefined risk. Correct, it is. But you also don't have to take any assignment, Alan. In Project Options Edge, I talk about that a lot. Like you don't have to take undefined risk where if you wanted to either put in a wider spread. So instead of doing like the 185, 175, you can do a 185, 175, and then like a 125 or 115. You can take like a $5,000 or $6,000 buy power spread. And here, I'll show you. Here, I'll go similar trade. Okay, I'll bring the option chain up. So let me go. Well, December 31st, unfortunately, doesn't have any additional expirations below 175. That's why I took the trade because I'm like, oh, let's go to the lowest strike ever. So let me go to either the 18th, which is the monthly. Let's go down to the 18th. And now we can go way lower. So I could do the 185 here, 175. And this is a trade that I might set up on my IRA accounts. So I can still get about $1.80 for this trade. This is the ratio spread that I put in for Project Options Edge. If I wanted to do like a 20 wide spread, I can still get $1 on this trade. So if I don't mind doing this, like, in fact, this isn't a ton of buying power. It'd take about $3,800 on my IRAs. So I will go ahead and sprinkle this in for my IRAs and see if I can get over $1.05 on this one. Let's try to get $1.10. Yeah, I'll do that. So I'm going to try to get $1.10 or at least $1 on this trade. Let me get into some of these IRA accounts. That would be this one here. Okay, so this one takes up $38.92 in buying power. $1.10 isn't filling, so let me see where I can find a price on that. So let's go maybe $1.05. As long as I get $1, I'm okay with it. $1.05 not filling. Let's try the mid price at $1.03. Okay, hopefully I can get $1 on this trade. $1.02. And the mid price is 109. You turds, don't steal me 7 to 10 cents. All right, $1 final offer. If it's not $1, I'm not taking the trade. I can go wider, but I'm trying to keep the buy power tight. $1. You freaking turds. All right, I'll come back to that in a second. So I'm taking the trade with a ratio spread of my margin accounts right now. What I was going to say, I like the trade if I put in the spread, so it takes up way less buying power, but you also can always manage the put side of the trade. So anyway, I'm getting like, out of sorts here. It's like, that's a Project Options Edge trade. It does take undefined risk, but you can also manage the put side. If you go to that December 31st expiration, the 175, the credit that I pulled in is about $2.48. So if that goes to like 750, take the loss, right? So if I pull in 250 on the trade, it goes to 750, take the loss, you lose 500 bucks. That'd be really the risk on the trade is about 500 bucks. In order for that to happen, you're going to have a pretty awful drop in price. I mean, realistically, we probably have to see like the VIX spike to 40 or 50 in order for that to be like, oh, this big volatility flare up. But you're so far away from price. I mean, literally the small caps would have to drop 38% for that to be a problem. Okay. So it's in Telegram for Project Options Edge. Cool. All right. What I'd like to do right now is let's jump into, so is everyone clear on engineered options? So the trades are still good. They're still valid. XSP trades are still valid. I don't know what the week's going to give us. Okay. But I have a feeling that today and through the rest of the week, look, we have major monthly expiration on Friday. We have a holiday weekend. The path of least resistance is probably bullish. Okay. So what I'd like to do today is I want to kind of construct like, could I get, I think the better trade is just to let this market drift higher. You know, we've got 85 here, 7,000 plus. This gamma level is probably going to get hit. Couple things we could look at. Do I think that the market would be higher by Thursday, Friday? Yes, I do. I think we're going to try to hit 7,000. Okay. But let me see. Elizabeth, I'm not sure what you're looking at here. I don't see it in my positions. What positions? Okay, Blake, now that we have a much larger room here, I appreciate all the assisted Q&A. If I don't want to miss any questions, but there's a lot going on here with 300 plus people and we're doing some live trading. So let me see if I can just stay on those questions. All right, we're good. Ed says, first day with you, you post the trading to finish all. Yeah, so Ed, the Project Options Ed trade has been posted. Let me try to find a trade for daily profit play today. SPX plus or minus. So we're looking at like an 18-point move today. We're at 83. I think that, hitting 7,000 is in the cards. What I'd like to do is let's play a little bit safer. I'm going to go to the expected move at the lows today. See if we can get a little either credit spread or butterfly action. Right now, there's your plus or minus 20 something, it's 18.63 on the day. Let's look to see if I did like a 15 delta, can I go buy, sell, buy? That's not what I want. 22, 18, 25. I can get a little bit of bias here. Let me find some gamma levels really quickly first. So 69.70. Okay. This one's not terrible, but it's a much higher delta than I'd like it to be. 50 cents is acceptable. I would take the trade. I'd risk 50. I'd risk 450 to make 50, but I have a profit trap in there. Or if you wanted to just do credit spreads, 17. So we want 17 delta. That would be $1.25. So I'm risking, 830 to make 170. Like that's not a bad trade on the day. If I sell and buy, I can get 300 bucks today, but I'm risking 1,700. That's not what I love doing every morning. So let me do this. Do I think the market can go up? Oh shit. All right. Well, that's different, huh? Okay, let me reassess. I mean, what'd that do? Drop in the last minute? We just went from 86 down to 75 in like a couple of minutes. So, all right. This is why daily profit play doesn't have a directional bias. We have some crazy crap coming out right now. Mixed, down near record highs, S&P rises. I mean, I don't know. I think it's just noisy. We have news we had news this morning. We had CPI at 8:30. Do we have anything at the top of the hour at 10 o'clock? I don't see anything. We have new home sales. I don't think that's going to be that's a low impact thing. New home sales, yeah, we'll see. I don't think that's going to be anything that's going to affect the market. I think it's noise, to be honest. All right, let me try one thing. So where'd we open today? All right, for my DPP peeps, I need some help. Did anyone get a pre-market level? When we had the pre-market, did anyone look and see what their plus or minus was on the day? Because based on that, I'm going to see if I can get, maybe trade to bounce. Let's see. I guess right now we're just looking at neutral. I mean, we opened up, there's the 9:30 opening candle. So we opened up around 80. We're only down a couple points. We can go back to neutral, fudge it. Let's just take a typical daily profit play. Price action's been pretty choppy. Let's try to find a typical daily profit play. 70-10. Don't mind that trade there. 70-10. Go. If I can get $1 in this one, I'll take the trade. Let's go 35 and 30. So if I go, I'm going to go single digit delta, see if I can get $1 or more on a single digit delta. So 8 there. All right, let me get a buck. If I get a buck in this trade, I'm taking the trade. $1 credit. Let this one hang out for a sec. Come on. Let me try those strikes one more time. That is 11 delta. What's our price action doing? I mean, I think we're going to get a bounce here around 69.70. 24. Okay, good. So what I was going to base it on was the opening price is 79. Take off 24. You're looking at like a 50 something potential low, right? So 70, 79. So 60, 69, 79 minus 24 and change just got filled for a buck. Okay, so trade is in today. Daily profit play coming in. I'm put this on my phone. Sorry, I'm like makeshifting this crap, but that's what we do when we trade. You want to trade on the road? You have a laptop, you have your phone, you can get it done. All right, I'm going to daily profit play, DPP, new trade coming to Telegram right now. Today is the 13th. 15 and 25. And 30, 69, 30, 69, 20 dollar credit. Okay, trade is in Telegram. So that trade is in. Now that's in for a buck. Let me label that, and I'm probably going to put on a little bit of defense here just in case. Let's go group. Now we've got my DPP organized. So there's my trade for $1. I'll keep an eye on this one this morning. My goal is for this dollar to turn into like 30 cents or 20 cents before I take the profit. In fact, I'm going to go ahead and set a take profit here around, I'm going to go 20 cents for the close. Try to take 80 cents out of that dollar today. And then now let me look at a couple of defense trades. What the heck, man? All right, is our gamma level switching? What the F? I feel like this is not as accurate as I'd like it to be. Either this is like one of the largest transition zones I've seen ever in the software. I'm getting like a bad feed on my laptop compared to my desktop downstairs. But I'll be back on that thing in a couple hours. We should have an internet fella come in a couple hours to get me wired in. But I just needed some fast internet this morning. So I'll minimize that right now. We're coming into this pivot at 70. Like, don't freaking dump today. All right. I'm just throwing it out there. Look, this market could be, a noisy day. Because one thing that happened yesterday is we gapped lower and we did not stay within the market maker move. We expected like a plus or minus 23 and the market ripped. I mean, it closed up 40 points higher, right? We closed at 77. We opened at 35. That's 42 points higher on a plus minus 23. So that's very inefficient for yesterday. My goal today is that we're going to capitalize on yesterday being inefficient, and we're going to bank on today to be efficient or efficient. Okay. All right. So the goal is, let's see if price can stay above 30. I'll put a line here. So I need price to stay above 30. And I need price to stay below 70.10. Okay, so you see how I kind of position this stuff for daily profit play. Right now, is that pretty square, like that smack dab in the middle? So we've got price looking pretty good. Might get a pop later today. Yeah, I'm sure he's going to try to talk something up. Who knows? My goal is to be out of the trade prior to that, Garrett. I'd like to be out of the trade prior to that. Okay. So really quickly, it's already up 15 bucks. If I can grab like 50 bucks with you this morning, I'll just take the profit and move on. Okay. What I was going to say is for the remainder here, 30, I'm going to try to put in, gosh, I mean, this is the only thing that makes me a little nervous. This is open space. I don't think the market's going to do that with the major options expiration on Friday. I think the order flows are still pretty consistent, pretty steady. And after an inefficient day yesterday, I'm hoping that the market will kind of stay within that plus minus 24 on the day. Okay. So let me put here in, I'll do a couple of horizontal black lines. If we opened up at 79 plus minus 24, so 6979 minus 24, you're looking at a 69.55. So 55 should be based on the market maker move. That should be about where the market doesn't go down any further. And then 70, 69.79 plus 24 puts us up to 7,003. And hopefully with this pullback, it's going to be harder for the market to rally up that far today. So 7,003. There we go. So let me just explain what I've got on the charts here. The blue lines, so the blue line above, the blue line above, below is where I need price to stay above this blue line and below this blue line for my daily profit play to profit. No, man, it is. Check your who's got a Telegram? I posted the trade at 9:47 a.m. That was 5 minutes ago. Check daily profit play alerts, Ed. It's in for the daily profit play alerts and members. Okay. So if you're a daily profit play member, you have that member Telegram. If you're an engineered options member, you have that member Telegram. Okay. This is not published in my public Telegram that I, share just random links and YouTube videos and, analysis stuff. This is a trade alert, but I posted that at 9:47 a.m. Eastern time. Okay. So I'm going to write down, I took the trade for IWM. So project options edge, IWM, daily profit play, 113, PPP. All right, let me look and see if I could position this for a little bit of forgiveness. Now the VIX, take a look at the VIX really quickly. I want to look at intraday VIX for a moment. Let's see if, as long as price isn't making some obscene high. All right, so VIX is spiking a little bit. Let's see if it just kind of gets contained there. So I'll set a chart alarm at, let's go 16 VIX. And then this recent high at 16.6 VIX. Those are just levels I want to be kind of noting because I might make adjustments on calling a bottom. But if we go down in the VIX, I mean, this could be just a noisy VIX, right? We spike up for a second and then we, stall. The market has an efficient day. The VIX is choppy, and that's pretty perfect for daily profit play. Okay. All right. Good. So what I'm looking at is, I really did think that the market would try to come back to this low yesterday. I thought we would go, and it didn't happen, obviously. But when the market opened here, I was like, okay, I can see the market filling the gap, fumbling around here, and then working its way back down. But we proceeded to go all the way up to fresh highs. And now that we're right there within like that little whisker of 7,000, if we've made that type of run, flows continue to be positive for the week, I could see us just, still kind of buying the dip, having higher lows, trying to get to higher highs, and just trying to carve out that 7,000 top. So I think we still stay, eyes on the prize. 7,000 is what the market's going to be going after. This week is a good time to get it, to be honest, just because it's that time of the year where it's like order flows are coming in. Everyone was excited that the market finished at all-time highs. We have much more clarity, and you could call it like I think you have visualization on like what the Fed is trying to accomplish, what the government's trying to accomplish, and putting those forces in the same team, like aligning fiscal policy, aligning monetary policy, should continue to put upward drift into the market. Okay, I still think we have flare-ups of volatility. We could have some interesting like data center bottlenecks this year. We could have some shortages and supply stuff. All that will cause some volatility. I don't think the 2026 is going to be without volatility. If it's a Goldilocks year, freaking awesome. But I think it's gonna be noisy. So I want to, like I said earlier, I'm going to dip my toe in the water a bunch of different ways and try to take some nice income trades. Okay. Chuck says, I did not get those trades in my engineered options. What trades, Chuck? They were posted Monday morning before the market opened. I posted a video. I posted another video yesterday. Do you have your engineered options Telegram? If anybody is like missing a Telegram channel, contact support. Okay. It should be in your member Telegram. Okay. All right. All good. Just double check that. Johan, if you want my public Telegram, I can share that one. Well, actually, I probably share it. Let me share it tomorrow. I'll have my workstation back tomorrow. I'll be wired in downstairs. I'll have my, my office space back. So in fact, in the next maybe hour and a half to 2 hours, I'll have a dude come in and do some drilling and hopefully get our place all wired up and ready to rip. So we have fiber cable here, and downstairs I was literally getting like less than 10 megabytes doing like live streams. I was basically getting worse internet than like a hotel Wi-Fi. So, and probably more like motel Wi-Fi. If anybody's a fan of Schitt's Creek, maybe the Rose Hotel, that was their Wi-Fi, was like 10 megabytes. That's what I was getting in my office wired in yesterday. So I'm like, come fix this, you jerks. So, okay. I'm thinking for the remainder of the day, I remember motel Wi-Fi. All right, so I've got the trade in around 30. Let me see if I can get this defense trade running. So I've got the top in. I don't think I need really the upside risk on this one, but I can certainly do it. So I'll do 20, 30, and 45 if I need it. So that would be risking, I'm going to try to get $1 on this trade. Okay, that gives me $1,000 profit trap. I don't think this is going to fill, but I'm going to put it in for $1 credit anyway. I'll post these trades in Telegram, just bear with me. So I'm looking for $1 credit. That would be a risk of 400 to make 100, but I got a profit trap of $1,000. So that puts my break even up to like 70.41. I don't think the market's going that high today. So 70.41 pending order. And then on the downside, if this is my 10 wide on daily profit play, I will go 35, 25, 10. And that my break even down to, let's see, break even goes down to 14. So risking, I'm going to try to get $1 here. Risking 14 for $1. Or I'm sorry, risking 400 for $1, but I have a profit trap of $1,000. So 25.10 is 15 wide. I should be risking 4 on the trade. $1 credit. That's correct. Okay. Trades are in. All right. Let me type these in Telegram for daily profit play. And that's kind of it for my daily profit play. I will be out of the office around 3 p.m. Eastern time, so I'm not going to be around for the close. My goal is, and here's what I can do on the day. If the market is still in between my expected move levels, then my standard daily profit play is going to be worth probably 60, 70, 80% of the max credit. And I'm totally happy taking that off. If I take that trade off for profit, then I will cancel those defense trades I just posted. Okay. All right, good stuff. Nice, Mark. Good fill on that one, dude. 186 for that IWM ratio spread. Excellent. Excellent. Good. Okay. All right, so I'm going to post these defense trades. So defense trades for daily profit play, SPX 113 expiration. So the call side is 20, 30, 45. Buy 70, 20. Sell 70, 30. And buy the 45. That's for $1 credit. Okay, and look, I think since we have a nice crowd today, I'd like to do a little anatomy of a trade session. Let me double check my calendar here. Blake, do we have anything slotted? Are we doing another live stream read through? I'd like to spend like maybe 10, 15 minutes on just a quick anatomy of a trade. I know I'm throwing a lot of stuff out there. I got a lot of new members that have jumping into these daily profit line rooms. So, look, I want to make sure like we have little bits of education where there's lots of trade examples and strategy stuff. Like I've told traders this for a lot of years. Option trading is kind of like your trader's sandbox. If you can think of a narrative, if you think of a story, if you think about a way to play the market, you can create an option strategy to display that. So if you're bullish on anything, there are a lot of ways to trade that bullish. Low risk and high risk, low reward to high reward, right? If you're bearish on anything, you can do the same thing. Low reward to high reward, all sorts of ways to trade that. If you're neutral, you think, you know what, I don't think the market's going to go anywhere. You can trade it neutral. So literally, you can craft these strategies where the market can go up, down, sideways. And the nice thing is you can do it with defined risk. So if you're risking, 1/10 of 1% on these trades, this is what I do. I risk like 1/10 of 1% on 20,000 trades. And do I win most of my trades? Yes, because it's, in the probability sense, a lot of the stuff is like, I know that I have like an 85% chance of profit. I know that I have a 93% chance of profit. I know this might be 50-50. It's not generally not 50-50 when I take a trade, right? But if it's 50-50, then I'm trading at, omnidirectional, whereas I don't really care where the market takes it. So anyway, let's talk about a little bit of a strategy breakdown here. And if anybody's in engineered options, you also have that practical options video series. How many of you have started the education inside engineered options? You're not going to hurt my feelings if you haven't, but you have your video series for engineered options. You have your practical options. If you're new to option trading, I built practical options. It's a bonus course. If you go through practical options, it's like, I think it's 8 or 9 videos. It's like 13 of my favorite strategies. Now, all that is bonus education. Okay. It's just bonus education. But the reason I do that is because I want you to be comfortable when I go through these trading sessions and I'm clicking buttons and I'm putting in trades and I'm doing debits and credits, that you're going to learn right alongside me doing this stuff every single day, that all you need to really see is what strikes is Chris choosing, what's the expiration, and you can take the exact same trade I do in literally less than 60 seconds. Okay. All right. So I'm going to address that right now. Let me get that other defense trade in for SPX really quickly. So 113 expiration. I'm doing the put side. That was a 35, 25, 10. So buying the 6935. Selling the 6925. And buying the 106910 put. Okay, these are pending, and I'll let them sit in my platform. Okay, so I have the trade in for today for daily profit play, 2 defense trades with a 10 wide profit trap. So, if we're testing the high or threatening the high or threatening the low, I've got about 1,000-point buffer, or I should say $1,000 10-point buffer to see if we can maybe squeak out some defense that should help us wash the risk. Okay. All right. All right. So the trades are in. We're hanging around 60, 65. Current daily profit play is break even right now. It's down about $10. No big deal. Geez, man, what is this freaking market doing? Well, here's what I'm saying. Don't be inefficient. Like, don't give us an inefficient day and then follow it up with another inefficient day. That would look, it's no longer holiday crap. Like, get your ass together, market, be efficient. This is what we've made, 90% winners on, which is we typically bank on the market when it has a lousy day where the market's not efficient, then it typically tightens things right back up. So hopefully that is the case. Unless, and I'm being like cynical here, unless the market after it blew up Captain Condor last year, they're like, you know what? We're going to do this every day. We're just going to blow out the highs and lows every single day and test those limits. Shouldn't affect us. We're not trading 30 deltas or 20 deltas, we're not martingaling, but I certainly don't want to see the market, not respecting the highs and lows. So remember, I've got the black lines on here for a reason. If the market is going to be efficient, we will stay inside of the black line bottom and inside the black line top, which means we should see inside these prices between 69.55 and 7003. If we do that, market efficiency, good stuff. Okay. Let's see here. Found your great videos from 5 years ago. Awesome, Zana. Thank you for that. I posted defense trades, Rob. Yep, it's in your Telegram. Let's see here. Good. You got level 3 approved there, Chuck. Awesome. Cool. Okay, let's do this. Blake, let me see if let me get this over here on the other screen. Make sure I'm not missing anything. So let's see, control screen on my computer. Okay. Correcto. Okay. Yeah, let's go one-click trading. Hopefully I can pull this up and log in. Members area. Just give me a second to find my login password. Right. Blake. Okay, so I'm logged in. If you go into your member area, I'm just going to go into engineered options, and let's go to show all. Go into engineered options. You can search for it. There's my engineered options. Now in the engineered options classroom, this is your member Telegram. In my daily profit play, there's your members Telegram. So make sure like those are member classroom Telegrams that I post all the alerts to, in addition to the tracker. So my spreadsheet trades for engineered options, the Telegram that I posted of trades this week, the videos that I posted, I was asking for the fire emoji. That was my little check to make sure you watched it. So about a third of you did. I want more, obviously, trying to hold you accountable. Like this is a big class. It's gonna be a lot of fun. Make sure we're all on the same page, and I can, bring every trader from all new, brand new, I've never taken a trade to, man, I can't believe how fast I learned that strategy with Chris. That's my job. Okay. Now, if you go down here, the masterclass on Thursday, click on this link to join me on Thursday at 2 p.m. Okay. Practical options. If you want to come to the live sessions here every day, the public Telegram, but practical options, I'm going to click on this. Okay. So I sell this course a la carte on demand pages, my website, for $500. So you have it. It's included. Why am I doing this? Because this is what I gave to my nephews. This is what I've given to clients. This is what anybody that's ever asked me, Chris, I've seen your YouTube videos. I watch you. I followed you. I traded, blah, blah, blah. if you want to learn how to trade options, this to me is this is the fastest way to learn how to trade options. Anybody that would ask me about options, I would love, again, you got to commit to it. It's going to be, 3-4 hours of your time. But if you watch this video series from start to finish, I think you can come into these live sessions and come to these live trading sessions and be much better prepared and well equipped for placing trades and understanding what is the trade we're doing. I've heard that name before. I've heard that strategy before. I know the difference between a call and a put. I know the difference between a debit and a credit, right? Just those little things. If you can start doing that, like, I just a little bit faster, that's good. Navigate your broker platform a little bit faster. That's good. So, introduction, key terms, risk graphs. Like one thing when I first started trading options, it would have been like 2011, 2012. The one thing I always looked at visually, I'm like, what the heck does this graph mean? Because it would be like the price of the assets and the risk reward. And sometimes it would just be lines, but it's like, it doesn't really show you any visuals. It was just like the most basic stuff. Now, I mean, a good way to see this visually is if you go to optionsstrat.com, okay, and you look at this build section, give me a strategy. Let me see some comments in the chat here. Give me a strategy. Because what you can see in the bottom right-hand corner, you can see all the green and red. This will show the risk profile of every different strategy you can take, right? So you want to go neutral. These are all directionally neutral strategies. So when the market doesn't go anywhere, you can plan on these types of strategies for the market to stay neutral. And you can make money doing that, right? Directional. Okay, directional. This is your reverse iron condor or butterfly. Who said that? Reverse iron condor, it's right here. Directional. So you have a dead zone in the middle. That's why I see the sagging red price on that risk graph. Everybody see that over here? Look at the reverse iron or the inverse iron condor. So you have a dead zone in the middle, and then if price moves directionally, you get paid on that. So there's your reverse iron condor, right? Iron condor, that was a directionally neutral strategy. So you have your profit in the middle, and you have your risk if price goes too high, too low. The trade I just took this morning on daily profit lay is an iron condor. So I want price to stay inside the range, which if you see my chart, I want price to stay, I want it to stay above this blue line, and I want to stay below this blue line. So even though we are down for the morning, I think that if price just falls for today and then works its way back to maybe 69.70, my dollar credit will close for full profit. I do not want to see price get below this blue line, but if it is, I do have a $1,000 profit trap down there to help me hopefully offset some of the risk. Okay, so that's a neutral strategy. The reverse iron condor is a directional strategy, but you need price to move one direction or the other, and you do have a dead zone in the middle, right? If you want to narrow that dead zone, it's deeper, it's more risk, but you can make that like so the reverse iron condor. So I take this trade every now and then. It's been a while because we have not had a good fill on it. I think, did we take one last week? We did one for I think we got a $6 credit on like a 20 wide dead zone. And there would have been a full profit. Like the market was directional that day. It stayed, above our dead zone. But anyway, it was like a 20 wide dead zone. And at the end of the day, that thing sags and becomes like full risk. So I was basically risking 400 to make 100. We closed out for a small profit and then, won the day. But what's kind of nice is I struggled to like kind of visually see the risk graphs at first. So like I walk through like kind of how I learned how to see them and have them make sense. And then once you get into the idea of building these strategies, are you neutral on the market? Are you directional on the market? Right? And so there's defined risk and there's undefined risk. And then there's all these income strategies. I mean, there's all sorts of fancy ways to trade. I probably have a solid like 15 strategies that I've traded over my career those are like my bread and butter. If I've got my quiver and I'm going to pull out my arrow, I've got, 15 of these strategies that I would call up anytime when it's like, this is what I want to express in the market. This is what I want to do. So this is the strategy that I'll trade. Okay. So even if you just come in here and play around with like the thought of these risk reward graphs, I mean, I'm still a big defined risk trader. Look, I will defend, my way of trading by saying like, I am not, and it's probably just because I'm not good at it. I don't like to get into a trade like a long call, long put and have to instantly manage profit. When I place a trade, I like to set the risk. I like to set the reward. I like price to do. I want price to do what it's designed to do, and I want to take profit, gradually. I don't like if you get into a call, it's kind of all or nothing. You need price to move very quickly, and if it does, you get paid. That's great. You get into a put, price moves quickly, great. But if you just sit and watch price go sideways, you're going to see the value of your option decay because of time. So these are my least favorite trades. Here's an example. When you buy a long call, if you do not get direction right and you do not get that direction to come quickly enough for you, you are going to struggle to make money on that trade. And most traders that start dabbling in options that are given the most basic permission to trade options are told, you congratulations, Mr. Smith, you can trade long calls, you can trade long puts. Think options. I hear all these great things about it, unlimited upside potential. But when you get the direction right and you still lose on your trade, that's infuriating. So I don't like that trade. And like I said, my best rule of thumb, I talked about this when I joined Lance, like the last 3-4 weeks, is my rule of thumb on trading long calls and long puts is whatever expiration you choose, you want to manage that trade about the halfway point. So if you choose like a 2-week option, you're hoping to get direction right within a week. If you don't, you're going to be fighting an uphill battle against time. If you're trading a 30-day option, you're hoping to get that trade right in 7 to 14 days. If you don't, you're fighting against time. That is the best rule of thumb I can give you for trading long options is manage within the halfway point and manage for profit, regardless of if it's like, oh, I think it's going to do this. It's like, don't wait longer because it's going to be harder and harder to get that trade to pay you the way you want to get paid. Right. So, again, whatever time frame you pick, you're going to try to get price correct within about the halfway point. Now, that also goes for limiting the size of your losses. If you manage at the halfway point, you're typically going to cut the volatility down. So you won't take full losses. And that will be one thing that's very nice is you would rarely, if ever, take full losses because you still maintain a little bit of time premium in the trade. Okay. All right. Okay, cool. Let's see here. What are the best 3 sites you would suggest to subscribe for option traders? So as far as what, Dr. John, like, what are you looking to do? I mean, I subscribe to Dynamic Trend and Tanuki Trade because I'm looking at gamma flows. I don't pay for Option Strat because I can build it in Dynamic Trend. I don't pay for Chameleon. I don't pay for freaking Cheddar flows. It's like I'm fortunate here. It's like I've got Lance's news flow scanner and stuff, but that is like that's not my. I don't love to trade those. I don't love to just buy call sweeps and put sweep. I don't like to do that stuff because what did I just say? You've got to get the trade. You got to manage it. It's like I've got a lot of other trades running. It's hard for me to take those blanket trades without setting take profits. So yeah, Simply Wall Street's great. That's fundamental stuff. I mean, that's like stock equities in general. I like Simply Wall Street because you can get a quick snowflake analysis, check the PE, look and see if the discounted cash flow model is good for growth and good for higher valuations and analyst targets. So yeah, that's not bad for a couple $100. Tanuki Trade is, I think I can say for going like 10% off Tanuki Trade, it's like maybe $400 for the year. My Dynamic Trend, they built me an exclusive 0DT package. It's like $945 for the year. I use that stuff every single day. Any masterclasses for pinch point? We had a masterclass, not that long ago, John. We had like 2 or 3 trading sessions. So we did that back in December. It's not that long ago. We'll get another one in. Let me get through this launch with engineered options. Let me get through a couple weeks and just kind of settle back in. And we've got some pinch point trades that are out pending. Okay. Dynamic trends. No, here's a list. Let me go back to the chart. What are you doing, market? All right, this market's being a real a-hole today. So that black line represents the market maker expected move. VIX might be, I haven't had a chart alarm go off on VIX yet. We are creeping up towards that 16 handle. Son of a biscuit. So where are we at for the day? Market is opening here. It's already down about 0.37. We're going to get over 16. That means we could have like a 1% move, which is going to be annoying. That is 0.7% to my threatened level. Damn it. All right. Don't give it all back today. Like, that's so stupid, man. Go up for the day, down for the day. We'll be back to flat in 2 days. Like, it wouldn't surprise me But here's why I intentionally chose the strike that I did at 69.30 and have defense down here, because the market just gets back to this low from yesterday. I'm hoping it actually holds. I mean, Trump's not going to try to dump the market. He shouldn't. He's silly if he does. I mean, this guy needs to do everything he can to pump this market up, which I don't like. I don't like that we're artificially pumping the market up. But if he comes in swinging geopolitical crap, then yeah, I mean, the market might not like it. But if it gets it out of the way first, then the market might rip on what he says because it's already been kind of pricing for a nasty day. So we'll see. But we are down across the board. S&P's down, NASDAQ down, Dow is down, Russell's down a little bit. Anything on gold and silver, dollar index is up a little bit, oil's up a little bit. Oil back to 61, huh? Blood muffin, that's not nothing. Let's go to daily. Oil's up to 61 bucks. That's a pretty big rip. Holy crap, that's a big bullish trade on oil, man. Okay, well, I guess 55 support held. So I had a trade in Project Options Edge. We were long in oil futures. We had that trade pay us at the end of the year. That was like December, 16th or 18th. I have been, and I'm still preparing for this. I think that oil prices might continue to have a lot of downward pressure. If the US is looking to continue to contain inflation, we need to see energy prices remain low. Right? It needs to remain low. So even if we come up to, 65-ish, I don't know. This is a really interesting trade because nobody's going to love oil prices at 75 to 80 bucks a barrel, and nobody's going to love oil prices down at 40 bucks. So I think if we're lucky, we just see oil kind of chop around between 55 and 65, but you don't want to see oil break above 70 plus. You don't want to see it really break below 50. But anyway, that's a pretty decent move since we were tapping on that 55 support for a while. Is natural gas up? UNG is nope, still garbage. Gosh, I'm out to a 2027 call option on that one. Gold just sitting at all-time highs. We're getting into that bar count. I'm just telling you, like, I'm putting this on the radar for like a 60-day window. I think that gold is going to try to at least make a topping formation and try to work its way back down to this 200-day moving average. That does give a pretty big volatility window from like February, March, April. If gold hits that 200-day moving average, that's going to be a big move across the board, and it's going to be gold, silver, equities. Like, it'll be a nasty little window that I think the market's going to give us this year. Doesn't mean that it damages the long-term effects. It's just be cautious, man. I mean, gold's been such a good trade. Silver's been such a good trade. Look at this, down 15% a day, and then it's back up to all-time highs. Silver just can't be stopped. However, I want to point out that I have a measured move on silver that is around 91 to 95. So if XAG goes to 91 to 95 window, that to me is like a measured top. So if we blow that off, we get to 100, just be cautious. This thing pulls back, 20, 30, 40%. Okay. In fact, I'm going to just move this up higher because we haven't really stopped going up. Eventually, when we get a correction on silver, eventually we get a correction. I'm just going to have a Fibonacci from low to high and just look and see like where these pullback levels are. Okay. Bitcoin's over 90, which is good. We'll see. I think Bitcoin needs to start creeping up towards like 96, 97. That might kind of put a bottom in around that 81 handle. Bitcoin is a pretty good AI play. If you're still, believing in the AI narrative, then I think Bitcoin's a good play. It was not fun. MicroStrategy at 165. That would have expired this week. If anyone's in Project Options Edge, we took a ratio spread. We did like a 505 ratio spread. We collected like 300 bucks on the trade. I took it safely. I didn't want to take the assignment, so I'm out of that trade. But anyway, good stuff. Okay, the videos and trading options. Yep, I'll go back to this. So practical options. If you have my engineered options course, I give you this included. Okay. If you are a lifetime member of any of my other services, Daily Profitly, Waterful Income, Newsbreakers, Double Up Alerts, Pinch Point Scanner, Project Options Edge, you have this video series included if you're a lifetime member. So introduction, key terms, risk graphs, option chain, strategy guide, PDF walkthrough. Okay. Buying calls and puts, basic option strategy, bullish spreads. Whether you want to trade a debit spread or credit spread, it's a bullish spread. Watch how I do it with lots of examples. If you want to be bearish on the market, debit spread or credit spread, look how I do it. Okay. Calendar spreads, diagonal spreads, ways to take advantage of time and volatility, butterfly spreads, broken wing and standard butterflies. I love the profit trap concept. I trade a lot of butterfly spreads. It's a fancy name, and all it is a combination of a debit and a credit spread. That is all it is. It is a combination of a debit spread and a credit spread. So when you take a butterfly spread, okay, what you're doing here, let's say that the asset is trading right here and you want price to go up. Okay. If everyone follow me, like your imagination caps here, prices in the circle, and we want price to go higher. So we think that price can move up to that zone. If I do a butterfly spread, what I'm doing is I'm basically doing a debit spread that will benefit from the debit spread would have this type of risk, right? So if I'm right, I get the profit of the debit. And then up above that, so at this point, I kind of pick a line in the sand and I would do a credit spread to match that, right? And when you put these legs together, the overlapping strike is in the middle of a butterfly spread, which is why the profit trap on a butterfly, instead of the look like a debit spread or credit spread, because they're put together and the strike is the same, the overlap looks like this. Risk, debit spread gets you paid, credit spread gets you paid, and because you have the overlapping strike, that's how you get the profit trap on your butterfly spread. So when you expect price to go up, you can kind of throw a net out there, and if price gets into your net, you can get that profit trap. Okay, butterfly spreads are great. They're high reward, low risk trades. Are they always easy? No, but if you can find a way to win 60%, 65% of your butterfly spreads, you're typically going to have a chance to make 100% return on risk or more. That's what I like about them. Broke wing butterfly is still calling the top. So if I think that price is moving up and I think it's like it can't go higher than this, if that's what I determine, right? Then a broke wing butterfly, I will say this is my top. I collect some credit. I call that top, but I put in a trap just in case. And I'll give myself like an extra 5 or 10 points of buffer here. So if price, tests the high, but then falls, I have that profit trap as a little, line in the sand. It'd be like, those like emergency runoffs that you see on the highway with semi trucks. It'd be like that for broke wing butterfly. If the price is going up, 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 but you have that barrier, it's like, okay, price has gone up. I accept that. I'm getting the credit on the trade. So if price goes up and then falls, I have no risk to the downside. But if price goes up and tests my level, I still have my credit and I have a little bit of a guardrail and a barrier to see like maybe a 5 or 10 point buffer to make sure I can still get paid before I take on risk. So it's a little bit of like a speed bump and hopefully price will respect it. Well, a speed bump doesn't really do a lot of justice, but I'd say more of like let's say the spike things you have to go over when you return rental cars, right? Whenever time you go over it, you're like, is this going to blow my tires? That's what you want for a broke wing butterfly. You want the market to not go up any further or not go down any further. Okay. Speaking of not go down any further, so we are beyond the market maker move today already. Volatility is creeping up. Gosh, dude. Somebody thinks we're having a new engineered options trade today. Why? I posted the trade on Monday. It's a weekly income trade. All right, Chip, I'll let you know. What else? So this recording we're talking about right now, this will be recorded inside of my daily profit play sessions or my daily profit plan sessions, or we do this on YouTube, youtube.com/financial wars that Blake is streaming both. Anyway, but practical options inside of your engineered options course. If you have any of my services that are as a lifetime member, this is also included. Okay. So I would say if you are thinking, hey, I like this option stuff. I'm pretty new to it. I'd like to find out more. I'd like to accelerate my learning curve. This is a great way to do it. Great way to do it. So please check it out. I encourage you to watch it because I want your feedback too. I gave this to my nephews who don't know how to trade. Now they do. I gave this to my, 90-year-old client. He knows how to trade now because he wants to play around with like a $50,000 account. Okay. So it's like there's a lot of strategies that I discuss with a lot of examples. And it's just if you know what your trade is doing, where do I make money? Where do I risk money? And what is that reward? What is that risk? Off we go. Cool. There you go. So Sharon says, I'm new to options, want to understand how to trade. Sharon, perfect. Right? You watch this video series. I want to see what your thoughts are afterwards. Right? Oh my gosh. Bullish spreads make a lot of sense to me. Do you prefer credit spread or debit spread? Right? If that terminology doesn't make any sense right now, this is why I built this video series. Because here's what's dumb about options. It comes with a bunch of silly jargon that Wall Street created back in 1973 to make it sound really smart. It's not. All it is do you know what you are expressing in your trade? Where does price have to go for you to make money? Where's your risk at? Where's your line in the sand? What is my reward to risk if I'm doing defined risk, right? All we are trading with options, any way you shake it, all the option strategies you trade, it's going to be price and time and volatility. That's it. Those are the only three things you really are concerned with any option trade. It's price and time and volatility. So when you trade defined risk, you can take away a lot of the power of time, right? When you trade defined risk, you can take away a lot of the threat of volatility because you can only risk or reward so much every single trade you take. Okay. Kermit says this is a standalone program. Yes, I sell this a la carte for $4.97 if you'd like it. $4.97 if you like this. I'm trying to think. If you want to send me an email, chrispulverpub@gmail.com. I have an on-demand video page for it, chrispulverpub@gmail.com. So if you just want the practical options course a la carte, then yeah, I've got a link for it. Okay. All right. Oil's up, market's down. Trump cancels meeting with Iran. Help's on its way. All right, baby. Well, here's what I'm banking on for the day. We had an inefficient day yesterday. I'm hoping we have more of an efficient day today. We still have some buffering, right? I'm taking on a bit of risk on my put side right now. That's okay. Let's see where our daily profit is today. And then Blake, I know we went long today, but we had a lot to get through. Plus, we're getting a big old chunk of people every single day. So let's do this. Today's daily profit play is down about $50. So I'll take it. It's fine. Let's keep an eye on this for the day. Still pending orders on the defense trades. Let's see if those are needed or play out at all. And I'm just going to keep an eye on price. So what I'm going to do is set a chart alarm here at 69. Let's go 69.65. Because if I get that chart alarm to activate, that means that we're right back in towards the positive negative gamma around 69.70. And we've kind of gone down for the day. We come halfway back for the day. That should help kind of neutralize my trade. So between 65 and 70, if I get that chart alarm, then we should be looking pretty good. Now, at the same time, I will go move it down to, I guess I'll move it to 30 because that's my threat on the day. I'll move this up to 70 and move this down to 30. So if my trade is threatened, I want to know. If my trade is getting back to neutral, I want to know. Because if this gets back to 69.70, my daily profit play is probably going to be worth 60, 70 cents of my max profit. And I'm going to take the profit. Okay. So as long as we stay above the blue line, below the blue line, my daily profit play is good for the day. So I'll keep an eye on it. Okay. All right, Blake, let's fire up the engineered options live stream for everyone that's hanging out. Lance and I will go live today at 1:30 p.m. Eastern time for his Stonkomania session. We're going to jump right into that. But I've got a session. So we did this webinar earlier this week. And, look, it's an exciting class. The trades that you'll see. So inside that webinar with Lance and I, the trades that we're talking about are still valid now. You can still take the trades now. They are good till canceled. So you can put them in the broker platform, take the same trades I do. They're still valid for the week. And so I'm doing this as a weekly income service, but I'm doing a bonus service for engineered options for the monthlies. And my master class this week on Thursday, I will give you the monthly trades. Okay. So if you want to jump into the classroom for engineered options, you can get the levels I put in for the weekly trades. And on Thursday's class, I will put in, I have 3 trades for my monthly. So, I mean, I want to make sure like we get off to the right start, understand the strategy, get our levels, break it down. We'll go into our, big deep dive